Well, good morning from London, England, and the Open Banking Implementation Entity. My name is David Beardmore, and I want to thank you for this kind invitation to join you at this conference and to share something of the journey that we've taken in the UK in bringing about open banking and bringing this to life. It's a real pleasure to join many friends and colleagues from around the world who are also on this journey as they seek to bring the power and the benefits of open banking to consumers and to small businesses. I hope that the experience that we've had here in the UK can prove useful and helpful to those of you who are thinking about how you go about setting about implementing open banking, and that you can benefit from some of the lessons that we have learned as we have developed standards, the experience guidelines, and building an ecosystem. There's one important point that I always make at the start of a presentation like this, and that is that not everything that we did was right. There are things that we might do differently if we had our time again, if we could wind the clock back and do this all again. So this is not all about everything that we've done brilliantly and you should just follow exactly what we've done. There are things that I think we might want to change if we had our time again. I began my life in open banking in 2016, right at the launch of the report from the Competition and Markets Authority, the CMA, which is the UK government's competition watchdog. And the CMA released a report into how we can increase competition in retail banking in the UK. My role here at the Open Banking Implementation Entity, the OBIE, is that of the Ecosystem Development Director. The OBIE is the body that's charged with overseeing the implementation of open banking in the UK. But in that role, I've been fortunate to travel and to advise governments, regulators on open banking matters, including in Canada, Mexico, Australia, New Zealand, and Japan. So anyway, I'd like to begin, first of all, by looking at the foundations for open banking. This is the way that we made it happen in the UK, and many of these elements have been used in other countries around the world as they adopt their open banking into their own cultures and banking systems. I'll then say a few words about the UK situation, so where we are on the journey towards mass adoption. And then finally, I'll just share a few thoughts as to what I think is coming next for open banking. So first of all, what is open banking? What's driving this new approach to open banking? I'd like to suggest three foundational principles. The first one might surprise you. The first is that it's nothing to do with banking, in my opinion, and nor is it about technology. It's not about APIs and it's not about banking. What I believe open banking is all about actually is consumers, citizens, realizing the value of the data about them. It's about customer data. It's about data that you and I as individuals have rights of access and about choosing what we do with that. Here's my definition that I wrote several years ago, top left in the screen there, and I haven't seen any reason yet to change that. So a consumer view, as I say there, a consumer choosing, and that's a really key word there, a consumer choosing to give access to transactional banking data from their current account and give that access to that data to an organization that is not their bank. So there's some pretty important principles, as you can see on this slide there. I'm going to talk about the Australian CDR approach in a moment, but at the heart of open banking is consumers having the right of access to data about them. So it's about consumers choosing to decide who's got access to that data, who can use that data, what products and services they give off the back of that data. Right at the heart of open banking is consumer consent. Without it, there is no open banking. So if you choose not to give consent, then you will not play in open banking. And then some of these other points here I'll go on to talk about in a moment, a trust framework, and some of the banks that are operating that. But essentially, it's about us as consumers choosing to give access to transactional banking data from our current account to an organization that is not my bank. So apologies to the big banks who think and sometimes behave as if this is their data, their property to do with as they want. I think this last decade has seen a rise in the awareness of the value and the use of data. Now, unfortunately, a lot of this increased awareness has come from scandals about the misuse of data. I wonder if you remember, it seemed not that long ago that we were all getting hot and bothered about Facebook and Cambridge Analytica and how they went far beyond what was permissible, and they used the personal data that they had access to for their own gain, and how individuals created a backlash against that. Individuals are now much more aware that this is data about them. It's about their purchases, their behaviors, their motivations, and the decisions that they take. And therefore, decisions about how that data is used, analyzed, interpreted, and so on, should be made by the individual. So I mentioned CDR on the slide just there. Let's talk about Australia as my first example, because I think they got this right. And they got it right from the very beginning. So CDR, the consumer data right, starts with banking data, but immediately moves on to look at other sectors of the Australian economy. So they went straight from finance to looking at utilities, to telco, to healthcare, and other sectors of the economy. And in my opinion, that's something that they have done better than we have done in the UK. At the moment, we have been very successful in moving open banking along, but we are now locked in a battle, a struggle to move from open banking towards open finance, and more of that a little later. So the first point, if you like, is that it's about consumers having rights of access to data. My second foundation for open banking is the trust framework, and again, that appeared on that slide just a moment. So this is the mechanism to be sure that the participants who are active in open banking are who they really say that they are. If we want people to share sensitive data, and that's what open banking data is, if you want people to share this sensitive data, then we need to be certain that the platform is secure. We ensure that in the UK here through our open banking directory, which requires that all participants are thoroughly checked, authorized by the appropriate competent authority. So in the UK, that's the FCA, the Financial Conduct Authority, and that they're authorized for the specific role that they play, and that they present valid digital certificates to prove their identity to other authorized participants. It's important to note as well that the identity checks that we go through when we onboard a participant, we perform those same checks every day. So we do daily permissions checks to ensure that an actor, a player in open banking, still is allowed, authorized, and registered to be operating in open banking. My third foundational step is what I would call some kind of regulatory framework. So in Europe, we had the Second Payment Service Directive, PSD2. In the UK, we had the PSD2, but when overlaid that with some additional framework guidelines to bring about open banking in the UK. In Mexico, they have their fintech law, and there's various other initiatives that are taking place in different countries to develop the regulatory framework. But for me, the important point here is that we're separating the rules for playing away from market forces. Now, there needs to be good commercial sense in open banking so that all participants see the value of it, and it needs to commercially, it needs to eventually stack up. Although, as in the UK's case, it may need some injection to start with for the first year or two. But what I'm certainly convinced of is that the market, whilst in my opinion fixes many things, doesn't fix everything. So if we take, for an example, a basic bank account, we have them in the UK and many other countries around the world, where the government stipulates that the banks must provide a basic bank account, often for the payment of state benefits and so on. Now, any bank providing a basic bank account loses money on them. They never ever make money. They can't do. Because there are costs to set up and costs to service them, and so it costs the bank money to provide that, even though they can't get any revenue from that. So there's a perfect example of where regulatory framework is required to insist on something that the market will not fix. So that's my argument for not leaving everything open to the market. Leaving things like that basic bank account to the market would result in none of them being offered. Now, these regulatory frameworks vary enormously around the world according to what's the norm in that particular country and the needs of that banking environment. So, for example, I mentioned that I did a couple of consulting engagements in Mexico. You cannot introduce an open banking law in Mexico without dealing with the important issue of financial inclusion. So there's something like 50 million out of a population of 120 odd million who have no bank account whatsoever. So it's pointless introducing open banking that talks about sharing your bank account data in order to gain additional services if nearly half the population don't have a bank account at all. So one has to take account the peculiarities of that local market. So that's my third foundation, the regulatory framework. There is a fourth, or an additional one, that I'll just drop in for good measure, and it's something that I am proud of that we've done in the UK, but not every country around the world has followed suit, and that is that we have a common technical standard. I think this is essential myself. I think this is highly relevant. And here we have an API standard that determines the presentation of data on a data schema. This is important if you're a fintech and you're going to consume data from current accounts from Bank A, and you set up your data import schema so you know how you're going to receive data. That's all well and good, but then when you come to Bank B and do the same for your product, and that bank operates a completely different data schema, that then becomes a new piece of work that you have to do to modify your fintech solution for them. And then you move to a third bank and a fourth, and so on and so on. And eventually it becomes so difficult for the fintech, it can become so costly that in the end they give up. It's because it's not worth it. So in the UK, certainly for the mandated 9 in the common standard that we built, the data schema is defined, and everybody sticks to the same recipe. That makes it much easier for fintechs to build to a common recipe and plug in their product and service to any bank that is playing to that specific recipe. As I say, I think this has been an essential ingredient in the success of open banking in the UK. Anyway, let's look briefly now at the situation in the UK. As you probably know, open banking was launched effectively at the beginning of 2018, on the 13th of January 2018. And our 9 largest banks, or the 9 banks that were mandated as part of that order, between them covered something like 85% of all current accounts in the UK. So that was the reason for those 9 being selected and operating under this mandate. And the mandate required them under PSD2 and under open banking regulations to make current account data available to an authorized regulated third party if the customer so agreed and so consented. We have 2 types of authorized third party in the UK, and they're very simple. One is an account information service provider, AIS, account information, and the other is PIS, payment initiation. Very different, and again, if I just pull up a slide, I'll just highlight some of the differences here. Sorry, I beg your pardon. Let me just first of all just describe the current state of play with those third parties, those regulated third parties, and the numbers of where we've got to. So currently, there are 774 firms enrolled in the ecosystem, but of those 774, as you'll see top right, 313 of those are now live in production. So they're out of sandbox. These are all fully live with propositions facing consumers. And there are 85 banks, ASPSPs, and 228 authorized third-party providers, TPPs or fintechs. So those 313 are the ones that are live in the market. Now the 85 ASPSPs, the 85 banks that are providing data, providing now access to well over 90%, probably much higher than 98 or 99% of all the current accounts in the UK. If you are interested in activity and technical activity, so last month we processed well in advance of 800 million API calls in the month. So that would be me as a consumer giving access to a fintech to pull my transaction data from the bank that I have my current account with. That would be one API call, and there were over 800 million of those last month. But the figure that I'm most interested in is the one that's at the bottom left there, and that's the number of individuals, consumers and SMEs, because our mandate, the open banking implementation entity, includes both consumers and small businesses. There are more than 3.5 million who have made a choice to connect their current account or accounts, if it's an SME business, to an open banking provider. And that we think is tremendous success. That figure, all of those figures, the API calls, the number of consumers, and the authorized live in market increases month on month. There hasn't been a single month where the figure has stayed still. Every month is continuing to grow. But the next issue then is, okay, so we have all of these API calls, we've got all these authorized parties and 3.5 million consumers and SMEs who are choosing to use this. Well, what are they using it for? Well, let's look at some of the use cases right now. Many of the names of firms on here you'll find on our website, and these are just examples. These are not recommendations, but these are just examples of fintechs and sometimes ASPSPs who are providing these kinds of services. So I mentioned that we have two areas of interest, consumers and SMEs. So this is the consumer use case map, if you like. Probably the first use of open banking was in the AIS, in the account information space, and the first things that came along were those top left, those personal financial management apps. So this would be where you could link your current account or accounts, if you have them, see all of the data on a single app, but also have that data reclassified, and helps you to understand how you're spending, how much money you're spending on transport, on entertainment, on food, on travel, on whatever it might be. So it's helping you understand how you use that money. Many of those PFM apps also offer things like micro savings that will say, well, you can set some guidelines. So if every time you spend less than £5 with your debit card, you can choose to round up the amount to £5, for example. So let's say you bought a cup of coffee that was £3.30. This will test my maths out now. You buy a coffee at £3.30. Your app will automatically take the £1.70 to round it up to the £5. Take the £1.70 and put it into a savings pot to help you save for a holiday or for a new TV or whatever it might be. So those sort of micro investment, micro savings piece. But another really important thing that I love to see is where the personal financial management and the understanding of how we're using data is used to help individuals who are struggling. And during these pandemic times, that's a lot of people. So the whole area of debt advice. There's a lot that's happening around open banking for consumers around the borrowing piece, particularly around things like recognizing rental payments, house rental payments, as opposed to mortgages. So there's lots that are happening in the consumer space. That's not the exhaustive list, but there's a few on there. Let's look very quickly at the small and medium-sized enterprises or small businesses. In many ways, it mirrors what's happening with the UK. So these are businesses who are connecting their multiple current accounts. The first thing that is by far the most popular is the top left, is the cloud accounting platforms. So there are a few there that I mentioned, there are others available too. But those cloud accounting platforms really go a long way to help a small business to understand its cash flow, how money's coming in, how money is going out, where they're going to struggle for a few days, where perhaps they pay all their staff or they pay their rent, but before they get paid by their biggest client. So there's a lot there in that cloud accounting space, and a natural flow from there is the cash flow forecasting, where the AI powering of an app will allow an SME business to get greater insight into how their cash flow is going to land during this month. Where they struggle, they may then find alternative sources of funding to bridge any working capital requirements that they may have, often just for a few days, as I say, until their biggest payment comes in from their largest client. So there are plenty there. On the far right, there's a lot around open banking payments, particularly around international payments, which traditionally have been very expensive from the high street banks. There are a number of apps and services that are doing that really, really well. So those are some examples of the use cases for consumers and for SMEs. If you want to see more of those use cases, please take a look on our website, which is openbanking.org.uk. Look on there for a link to the App Store. This is not a commercial money-making app store like the Apple App Store. This really is a shop window where we show and highlight all of the products and services that are powered by open banking, broken down by consumers, by SMEs, and by technical service providers because that's an important area for us in the UK. You look on there and see who's offering different kinds of services. I think there are over 100. I think there are 103 today. There are 103, but you can choose and segregate on there what will be useful for you. Have a look by all means. I'd encourage you to do that. So let's finally look at where we are in the UK right now. I think we're at an inflection point, quite an important inflection point, because the roadmap of agreed deliverables that was required by the CMA is now coming to an end, probably sometime in the next few months. But this doesn't mean that the job is done. So we need to focus now on end user adoption for sure, increasing the number of consumers and SMEs that use open banking powered products and services for sure, all of those kinds of things. And we also have to deal with some of the unexpected issues that have arisen. So for example, 90-day reauthorization is a very tricky area. I can understand why 90-day reauth was written into the regs at the time it did, but it has become a massive stumbling block, and I believe there will be action on that. So that's another area that we need to focus on. But to me, more important than the progress of open banking itself is the move towards open finance. So unlike Australia and its CDR approach that we talked about earlier, the UK took a very deliberately narrow approach. So we just focused on current accounts in the banking space. And whilst it's great to have one of those personal financial management apps on my phone, I certainly do, many others do, and that shows me how I'm spending my sort of current cash, if you like, my current account cash. What I really want to know is the overall position of my complete financial picture, including pension, investments, savings accounts, and so on. And that's exactly what Open Finance hopes to achieve. Now, I think there's a widespread belief that in the UK, that open finance is a good thing and that it will be introduced. What isn't clear, at least not yet, is how open finance will be introduced. There are a number of consultations and reviews right now, led by different departments of the UK government, and all of them are looking in one way or another at how citizens can exercise greater control over the financial data about them in order to bring about the same kinds of benefits that we saw in open banking just a moment ago. But you'll need to keep a watching brief for news updates later in the year on if and how open finance becomes a reality in the UK. I want to conclude with just a couple of points around what's coming next. I believe number one is open banking payments, and this undoubtedly is the year that open banking payments will come good. We already have a very flourishing open banking payment scene, but I think you'll see considerably more this year. At the moment, we're limited to single immediate payments. So one of the big use cases is for charitable giving. So there's a charity platform in the UK called Just Giving, one of several, but they have enabled open banking payments. So if I want to make a payment to a particular charity that's supported by Just Giving, I can make a payment directly from my current account via the Just Giving platform. And the beauty there is the money flows directly from my account straight to Just Giving, not via the credit card rails, each of whom adds some friction to the process, takes a few basis points, and adds a little delay to the process. So that's a single immediate payment that is possible right now. What isn't possible just yet are variable recurring payments. So for example, if I want to pay my utility bill, so my gas bill, for example, is going to be much higher in the winter when it's freezing cold than it is in an English summer when it's also freezing cold, but hopefully not quite as cold. And so the payment is recurring, it happens every month, and it's variable, so it's not the same amount each month. At the moment, we have a consultation that is just concluding around variable recurring payment, and I'm very hopeful that we'll see some positive moves towards variable recurring payment. And one final note on steps towards open banking payments becoming the norm. The UK government in the last few months now allows open banking payments for any tax payments that we need to make either as small businesses or as individuals. So in this case, it's the body, the HMRC, the body that looks after UK tax, that's leading the way. So number one is coming next is open banking payments. Number two, I would say, would be premium APIs or enhanced characteristics or enhanced APIs, whichever label you want to use there. So the open banking standard gives specifications for particular sets of data that are required under the under PSD2 in order to be able to make that data available to a fintech to provide products and services. There are a stack of other data fields and other data insights that that ASPSB's banks will have, that if they were regulated or if they were at least codified, they could also be really useful in the wider finance field. And I'm thinking here of things like the proof of age. So, for example, if it was a site that required you to be 18 or 21 to enter that website, to be able to prove that you are so, is data that the banks already hold, and this could be a really useful one. Another good example would be to confirm an address or to confirm length of residency at an individual address. So again, there's a lot happening behind the scenes in these enhanced characteristics, and I suspect we will see movement there this year. The third area, which I've already touched on several times, is extending open banking into other areas of finance and moving into this so-called open finance. So at the moment in the UK, as I say, it's just current accounts that we can look at, but we want to be able to broaden that so that we can see savings and investments and pensions and so on, to give our consumers and SMEs that holistic, that complete view of their finance. And on a related point, that is number 4, is the branching out from open banking into other sectors of the economy in exactly the same way that the Australian CDR approach has gone. So they're looking at things like open energy or open telco, where you still have the same trust framework, but instead of banking data flowing through the trust framework, it's data about your usage of your utility or your telco. So these are all areas where I believe that we will see significant movement. So I think all of this is leading to a really significant shift in the banking landscape, in my opinion. I believe that the idea that the major international banks dominate everything that we do in personal finance, well, I think that's going to weaken. I think it already has, and I think it will weaken over time. But I don't subscribe to the view that banks will die completely. You hear this rather Armageddon view from some people. I personally don't subscribe to that. But I do concede that the role that the banks play has to change, and is already changed. I think the role of the fintech is here to stay. I think they will provide data, or they will provide information and assistance and help and support to SMEs and consumers in the ways that banks could have done but haven't done, and therefore fintechs have stepped in and provided that, filled that gap. So I do believe that you'll see this pattern of the fintechs providing services to consumers and businesses will grow much more over the coming years. The one area that I haven't been able to touch on in this presentation, one that I love to talk about, and I do believe it will play a massive role in the transformation of personal finance and banking, is the role that the tech giants will play. There are many of them from Southeast Asia, from the US, and from continental Europe. All of these tech giants are undoubtedly looking very carefully at what's happening. I think very few of them have got ambitions to become banks, but I'm absolutely certain that all of them will want to have a significant role in how we manage our money in banking, if you like. I've heard it said that they may not want to be banked, but they certainly want to be involved in banking. And I think that is something we need to watch very carefully, and I'm sure you'll see it emerge over coming years. So with those points, I'm going to conclude. I'd like to thank you once again for the kind invitation to speak at this event, and to thank you for listening. I hope this has been helpful. Good luck in your own endeavours as you look to bring open banking into your own jurisdictions and countries, wherever you're based. Thank you again for listening, and it's been my pleasure to speak to you. Thank you.